All right, so my next guest says this is not a stock picker's market. It's an inflection point, and he wants investors to own the future, not rent it. So let's bring him in. EMJ Capital founder, president, portfolio manager, Eric Jackson. All right, Eric, so according to your Rising Destiny philosophy, this is the perfect macro moment. Tell us about it.
Well, thank goodness. We're almost at the end of our long national nightmare with Jay Powell running the Fed, Charles. Basically, he's a lame duck. We've had Scott Bessent say, there's going to be an announcement at the end of the year, and we think it's going to be Hassett. We know that there's going to be some reprieve coming from the Fed. We just need these kind of high rates to kind of go away and have a more jobs-focused, housing-focused economy. Like I was at the Bills game a couple of weeks ago, Charles, with this guy, a friend of mine, Nick Sinatra. He built a multifamily housing company from scratch over the last 13 years. It's one of the Buffalo's big success stories. And I said, how are the rates affecting your business? You're supposed to be the guy who's building the houses to ease the housing affordability crisis. And he said, it's dormant right now because of the Fed. Right. If we just got 50 bips of cuts, it would make such a difference to our business. And we're just one business in America that could build a lot more houses than what is happening right now.
And so your Rising Dynasty talks about liquidity turns, narrative resets, volatility scares, all of which is we're in the midst of right now, but also creating what you say is generational mispricing. So I want to ask you about that with respect to these data centers, the plays there, the power center capacity. So I saw this one table and I thought about you. Essentially what they're saying is that the opportunities for the neo cloud names would be somewhat limited with respect to these data center opportunities. Obviously, this is an area you pounded the table on. Are you still really extremely bullish on IREN and Cipher?
100%, because as the liquidity starts to ease, the small caps and the Russell names really are the ones that benefit first, and those are the ones that can 10x, 20x, 50 and even 100x over the next few years with more liquidity in the system. And IREN and Cipher are chief among those. These names have gotten hammered over the last, basically month, less than a month. It was almost like 2.5 weeks. These two names contracted almost 50%, Charles. Nothing had changed. And it was more like forced, hedge fund selling, machine selling that sort of triggered off of what was going on in crypto. Their business is as strong and robust as ever. And if you've missed just the last 3 days in Cipher, you've missed a 42% rally back. So when things shift, just like we saw after Liberation Day, like the violent upswings can be massive. Right. So you cannot just sort of be scared out of the market. You have to stay in these names, especially now at these discounted levels.
Again, you always had the extreme volatility is associated with this. You got to know what you own, believe in what you own, and ride the wave. Now, we talked about the Fed. The Fed obviously having a positive impact on small caps. There's a couple of small cap names. BTQ you've mentioned before, but Sana, S-A-N-A. Tell us about that one. I'm not familiar with it.
So this is a name that's worked on a cure, basically, for type 1 diabetes and has shown it to be successful in a handful of humans just in the last year. So obviously, they've got to roll that out in 2026 on a wider scale basis with more trials on a bigger population. But are you kidding me? Like, if this thing works and the early results look very promising, you could have a cure for type 1 diabetes. Also, the method that they use to develop this it can be reused via stem cells for a bunch of other treatments. So it's a platform play. It's a $1 billion market cap company now, but if they get some good news in 2026, this is the kind of thing that in a few years from now could be a $100 billion company like a Vertex.
I got 30 seconds to go. Of course, I want to ask you about Open and Better Homes. Let's just focus on Open for a moment because that's one. They're both down a lot, maybe Better Homes even more. But this is still an area that you see and think that these are opportunities to be 100 baggers.
Yeah, I mean, you interviewed Kaz, the new CEO. He's just a fabulous guy. He walked away from, he was in line to have the top job at $200 billion Shopify because he thinks that there's a bigger opportunity as the CEO of Open Door. And I agree with him. So these two names. Obviously, they're squarely in the housing bucket. It's been interesting to me just in the last couple of days when we got kind of weaker consumer confidence. We got a drop in the mortgage rates. Names like Rocket Mortgage jumped. UWM jumped, but Open Door and Better, which arguably should see more of a jump, they didn't immediately jump. So that's sort of life in the small cap world. I expect that to kind of continue to kind of change over the coming weeks, and with more good news for both companies. But Open Door just has a first-rate CEO. They are truly positioning themselves to be the Amazon of real estate housing, cutting out agents from the whole process, giving folks a better, cheaper price, making homes more affordable.
The bottom line for real long-term success, you got to invest in people no matter what. And I agree with the CEO there. Eric, have a great Thanksgiving. Talk to you again real soon.